My name's Galen Hare, and I'm a partner at Insurance Claim HQ, powered by Hare Shannara Trial Attorneys. What is recoverable depreciation? This is a topic that confuses a lot of lawyers. So if you're sitting here looking up what is recoverable depreciation, you're right to be doing so. There's two basic types of policies across the country. One is a replacement cost value, and the other is an actual cash value. Recoverable depreciation is the difference between those two numbers. I realize that wasn't helpful. So let's talk about actual cash value. That is the value of something as it sits today, right? You may have a roof that's 15 years old, but it may be a 30-year roof. The depreciation factor on that may be 50%. So they're not going to pay you for a brand new 30-year roof under an actual cash value policy. They're going to pay you for about half the value of a 30-year-old roof. The replacement cost value is what it costs to get back exactly what you had. So again, putting on that 30-year roof. So let's say a 30-year roof is going to cost $50,000. They may only pay you $25,000 if you have an actual cash value policy, but they're not going to pay you $50,000 either if you have a replacement cost value policy. They're going to do depreciation. They're going to take the 50 minus the 25, and that $25,000 is going to be your recoverable depreciation. You don't get it automatically, and you don't get it right away, even under an RCV policy. You have to actually do the work, fix it, or sign a contract. And different carriers are going to have different rules on this. Some are actually going to make sure you spent the entire 50 before they release that 25. If you only spent 35, they might only release 10, right? So recoverable depreciation is kind of a holdback that the carrier applies based on your policy to make sure A, you're really doing the work, and B, you're actually contracting. If you sell your house and don't do the work, they might limit you to your ACV policy. But again, that just happens based on each part of the home. So if you do some of the work but not all of the work, you may still be entitled to some recoverable depreciation. If you're having trouble with that, it's much easier to submit your claims for recoverable depreciation through an attorney, a public adjuster, or a contractor, because it really can get overwhelming. But no matter what, receipts and documentation are going to be key to getting that recoverable depreciation released. If you have any questions about this, or really anything for your claim, give us a call at Insurance Claim HQ. We'd love to help.